Hi, welcome. So today we're going to be looking at Costco together. We're going to assume that you've done all your due diligences regarding the management and what the company does, and you have a good sense of what the company does, and you think it's a good company and you're willing to invest in it. We're going to leave that all aside for now. We're just going to be looking at the quantitative side of valuation and seeing if Costco is a good investment at the current price. So I'm assuming, you did your research, you know who's buying shares in terms of, the insiders and, you know what the company does, and you've been there and you like Costco and you've done all that due diligence. Now we're asking at $460 or so a share. As you can see here, is Costco a good investment? So let's get started. So the first thing that I really like to do, and it's very simple and straightforward, is just go to Yahoo Finance. You type in Costco. You can see the market capitalization here. For those of you who don't know, the market cap is simply the number of shares times the share price. So let's say Costco hypothetically has 1 million shares outstanding and the share price is $10 a share. 1 million times 10 would be a market cap of 10 million. We see here Costco has a market cap of about 204 billion. So what that means is if you were to buy all the shares in the company that are available, you'd be paying $204 billion for the entire company. Another number that's very important, and to access it, we can go to statistics, is the enterprise value. What the enterprise value is basically the market cap plus the debt minus the cash. So it's basically saying if you were to buy Costco today, you would buy all the shares, and in exchange for getting all the shares, you would also own all of the cash that the company has, minus you would basically get that cash for free, and you would be taking on the debt, so the debt is an added cost. So when the enterprise value is lower than the market cap, what that means is that the company has more cash than debt, which is a good sign. And if we scroll down here, we can see the company has more cash than debt. So this enterprise value is basically saying, what's this market cap plus this debt minus this cash, and that's how we basically get this enterprise value here. Now, in terms of valuation, we look at this enterprise value and we see, so Costco's trading at $203 billion, which means if you were to buy the entire company, all the shares and whatever, you'd be paying about $203 billion for Costco. We can compare that very quickly if we scroll down to here, which are the finances. This shows how much the company made in revenue and how much it made in earnings. So we can see here Costco's made $523 billion in 2019 in revenue and made about 3.7 billion in earnings, and so forth. And you can look at those numbers there, and that'll give you a good sense of what Costco is earning. And what we can essentially do is we can look at, okay, Costco is currently, if I were to buy the entire company, all the shares would be paying about 203 billion. And if we go back here, it made 5.84 billion in 2022. So the question is, are you willing to pay 203 or thereabouts billion dollars for Costco in order to make $5.8 billion a year? Let's use smaller numbers to keep it simple. Imagine you're buying a pizza shop for 1 second. Imagine you're buying a pizza shop and the owner is saying, my pizza shop makes $100 million or $100,000 a year. I want you to pay $3 million for it. You figure $3 million is a lot for something that's only making $100,000 a year. How much can it reasonably grow, and how much money can I reasonably make over the next 10 years? And that's sort of what we're trying to see. So in order to do so, we're going to do what's called a discounted cash flow, which is basically looking at the amount of money that the company is going to make over the next 10 years as an estimate of roughly how much the company is worth. So basically, what we're going to need to do is we're going to need to figure out how much the company has made in the last year in terms of free cash flow. And we are also going to look at what the growth rate of those cash flows were over the last couple of years, so we can conservatively project the amount of cash that the company is going to make over the next 10 years and discount that back to the present to give us a value for Costco as an entity. So we can start off by doing that. I have Y-Charts open here. Y-Charts has a 7-day free subscription that you guys can try if you're interested in using it as well. I go to data and I type in here free cash flow. So I'm looking at the amount of free cash flow that Costco has per year, and we can see that over the last 12 months, it's been about $3.5 billion. I could use Excel to do this, but I don't really need to, because if we're looking at the company's making $3.5 billion per year. It's shown no real growth in its free cash flow over the last 2-3 years. But if we zoom out a little bit further, it shows a good amount of growth in its free cash flow. Even if we were to be, very generous and say that Costco can grow its free cash flow at 10 or 20% per year, there is no way that Costco will make you back your $203 billion that you're paying for it, making only $3.5 billion per year. Even if we were to say that that amount could double or triple, there's still no way it's going to be making you 200 odd billion dollars over the next 10 years. So in that sense, it's overvalued. And that's a really simple, straightforward way you can sort of do a discounted cash flow analysis in your head without really having to use Excel. We look at the amount of money the company's making in free cash flow. Even if we were to use this more, higher number, or even if we use the top number, which is 7 billion. At $7 billion, we take the 203 billion divided by 7, assuming no growth. It would take 29 years for you to make your money back on Costco. 29 years to make all your money back. Even if we were to say the growth could double or it would grow very fast, it just doesn't seem like a worthwhile investment to me at this current price. If the enterprise or the market cap of Costco were to fall, then it could definitely be a more worthwhile investment. But what we're really looking for is companies that are able to make us back our money that we're paying into it, within a reasonable time frame, something like 5 to 10 years. For Costco, that just doesn't seem to be the case. I opened an Excel spreadsheet here. I don't use Excel discounted cash flow spreadsheets. I don't think you need to. I think but I'm just going to demonstrate the way that essentially you can do it. So if you have a discounted cash flow statement, sort of like this, where you have a growth rate, you have the free cash flow, you have your discount rate, and then it's basically adding up all the cash flows discounted to the present to give you an idea of how much you can reasonably pay for the company. So what we can do is we can take the amount of free cash flow, so $3.5 billion per year, plug it in here, so 3.5. We have to pick a growth rate. To do that, there's a couple different ways that we can do that, but one of the best ways possibly to do that is to look at the revenue growth. And by looking at the revenue growth, we can see that Costco has grown as a median about 10% per year. So we can plug in 10%. And we do that by doing this. So basically what this is saying is next year Costco might make about 4 billion. In 5 years from now, make about 5.6 billion per year, and so on. And then it adds up all these free cash flows and discounts them back to the present. I'm using a 5% discount rate, which is fairly generous. And even using this low discount rate, we can see that Costco is estimated to be worth about $42.1 billion per share. If we have a margin of safety of about 50%, we can see that, $42 billion as a it could be what the discounted future cash flows are worth. And with a margin of safety of about 50%, we can see that that would be 21 billion as the market cap. If we go back here, we can see it's almost 10 times that. So at this price, I would not be considering Costco as an investment, even if we were to assume that the growth rate were double. Let's say Costco grows 20% per year over the next 10 years. And this free cash flow number, it seems to have been depressed here. So let's go free cash flow again. Let's use its peak free cash flow. So let's say it manages to somehow jump back up to $7 billion a year in free cash flow right away. Well, then that puts it at about $143 billion is what the next 10 years worth of cash flows would be worth in present value. 142.5, you're paying 200 right now. So Costco's price would have to fall by at least 25% to be a justifiable investment. Another way we can do this, and this is this is sort of the second method that I use, is what we're going to do is project out the future earnings per share of Costco 10 years forward, multiply that by a reasonable multiple, and project what Costco's price could be in 10 years. Now, it might happen in 9, it might happen in 11, but we know roughly, assuming there's no sort of major catastrophes, that Costco will be trading at this price in about 10 years' time. So the way that we do that is we take the earnings per share, which are $13.10 per share. And it's shown nice growth, and that's good to see. And we look at what can it reasonably grow at. And we've seen with Costco that it's grown at about 10% of revenues per year. And I'll show you that again. So Costco's revenues have grown about 9, 10, 11%. Let's just be generous and say they'll grow at 12% per year, so we can go back. We can take our calculator. We take $13.10 and grow them at 12% per year times 1.12, and we're projecting out how much Costco is going to be making in 10 years' time. So let's go. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years' time, we can say Costco will be making about $41 per share. And again, this is an estimate. It might happen in 9 years. It might happen in 8. It could happen in 11. It could happen in 12. But we know at some point in the future, assuming this growth rate remains sustainable, and it should, and it's a conservatively estimated growth rate, Costco will have an earnings per share of about $41 per share. We can multiply this by a multiple, which would be our PE ratio in the future. If it's growing at or growing at 12% per year, we can say a fair PE ratio is double the growth rate, so times 24. We could say that in about 10 years from now, but somewhere 9, 10, 11, maybe 12 years from now, Costco will be at about $976 per share. That's assuming the growth rate is consistent and we're able to project it. So the question is, are you going to pay $460 per share now for Costco when in 10 years it's going to be, let's say, $1,000 per share? You're only getting a double. A double is no good. We're looking for 5 baggers, things that are going to go up 5 times or more in 10 years' time. So at this price, Costco is not an investment. It would be a poor investment in my opinion, really. So we don't need to buy Costco at this price. We shouldn't. If Costco falls, let's say it falls to 200. Well, if you're paying 200 now and it's going to be $1,000 in 10 years time, then that's a 5 bagger. That's the sort of investment that we want. So I hope this video was informative. I'm not saying Costco is a bad company. I think it's a wonderful company. I would love to buy it, but not at $460 per share. If the price falls to 300, now I'm curious. If it falls to 250, I'm very curious. At 200 a share, I'm buying. So I hope this was informative. I hope it showed you how to sort of quickly calculate how much a company is worth. Again, this sort of discounted cash flow, using free cash flow without a terminal value is just a very simple way to do it. I don't think you need Excel to be able to see this. It should be so obvious that Costco is overpriced at this. It's $450 per share. It's only making 13 per share. Even if it were to grow, like we said, we project that into the future, we can see that at most Costco's doubling over the next 10 years. There's better opportunities out there. So we don't have to buy things that are overpriced. We're looking for great companies like Costco, but at better prices. So keep your eyes on Costco. If Costco falls 300, like I say, you should really perk up. You should be, oh my gosh, this is possibly a great opportunity. So that's Costco for you. I'm not buying it at this price. If the prices fall, I'll take a look at it. Like I say, $300 a share, I'm very interested. 200, I'm definitely buying, but 460, no way. So that's the video for today. Thank you guys. I hope you enjoyed. Please leave your comments. Please like, please subscribe, and let me know what other company you want me to look at next. Thanks.